morning for this Monday, November 11th. And as you remember, I put together the video quite early on Friday, so I wasn't able to report that. Look at the jobs report on Friday was much better than expected. Apparently, the economy added 204,000 jobs in October, and economists had it at about 120,000 jobs were the estimate. That's why the market took off on Friday, adding about 1% or up 167 points in the S&P 500. So as you take a look, I mean, look at, if you recall, Thursday rather was a very bearish engulfing pattern, right? Took out the highs, actually took out the all-time highs by about a point. Totally reversed intraday and took out 1, 2, 3, 4. The past 5 days low. This low right here actually closed below that low, and so obviously on Thursday I was thinking that the market was going to definitely move a bit lower from that pattern. But again, Friday the jobs report was much better than expected, adding a lot new jobs than what the economists thought. So what that did was the market was up about 1% on Friday, and the Dow was up 167 points. So you see the market closing near those highs right up in here, and then today the market's up again. We're really close to that high. The all-time high is 1771.5. Today's high is 1770.25. We're trading at 1769.5. So very, very interesting in here to see if the market is able to close above the all-time highs, see what the market can do in here. But I am definitely watching it very closely up in this area. In fact, if the market's able to close above the 1771.5, I would be looking for a buyer on just a small little pullback. But again, these lows are significant, and then what I said last week was this low was significant, right? So that meant nothing. The 1747 was quite significant to me. The market closed below that at 1745.25. Then we got that jobs report on Friday. Market took off, so we're right back up at those highs again. So really the question becomes, when do you stop buying the rallies and the whole 9 yards? So you know what? I would say that if the market is able to close again below that 1742.25, this new low, right? I wouldn't be looking to buy the dips unless we got a price pattern that would lessen my risk and really give me an objective stop based on that insider and engulfing pattern down to a deep support level. So all right, so again, these are the two levels that I'm really looking for here: the all-time high and this low. And if you recall the interest rates, I mean, take a look at bonds. Bonds have really plummeted here, right? Bonds have gone much lower. And if you recall on Thursday's video, we compared the daily to the weekly chart. Okay, now as you can see on the daily chart, the bars turn green. The trend off the daily chart, the rather short-term trend turned up here, but we got close to that 200 exponential moving average, which was a nice resistance area. But if you take a look at the weekly chart, you had every reason to be looking to go short this market, right? Turned red in here, the trend on a weekly chart, right up in between the blue and the gray action zone, just a very strong resistance area, and the market has come down quite a bit from that resistance area. So again, blue action zone, gray action zone, the 50 exponential moving average right up in here. All reasons to think that the market's moving lower. But again, that's off of a weekly chart. Again, if you flip it to a daily chart up in here, it looked bullish, but again, hitting its head on the resistance area, and the market has in fact come down. Look at Friday's action on a daily chart. I mean, it got a bearish engulfing pattern, and we've taken out this last low, right? The 131 in 20-30 seconds. We've taken that out to the downside, and we've made a new low today. So it'll be interesting to see how far we can go down in here as well. So hope that helps, and be back with you tomorrow. Bye for now.